I got to ask you about how you're feeling about economic growth, right? We've got stock markets have been growing like gangbusters. There's tax reform now having been passed. How do you feel about the U.S. economy right now, or the global economy?
When you look at it from the outside, it's certainly all the analysts are talking about synchronous growth. It's the first time we've seen for a number of years sort of the world's economy firing on all cylinders. And you look at all the events that are going to take place this year in Korea with the Winter Olympics, in Russia with the World Cup, and the midterm congressionals, what we call the mini quadrennial, as opposed to the maxi, which is in 2 years' time,
right.
in 2020. But having said all that, there's sort of scope for caution too, because there's pressure from activists, there's pressure from zero-based budgeters. People are generally finding that inflation is a low pace, and therefore pricing power is difficult to establish,
right.
and therefore there's a pressure on cost. So there are these balancing factors, but overall I would say the environment is a positive one, and possibly 2018 will be better than 2017.
Martin, what do you think is going to be the biggest risk, though, to that global growth?
Well, when one looks at it, the big drivers of the world, the G2, the US and China, the outlook is pretty positive. President Trump is certainly driving his agenda. Is their agenda around tax and infrastructure spending, and last but not least, reducing regulation. All of that bodes well for the US economy in the short to medium term. President Xi is taking a very long-term, strong, growth-orientated approach to China, higher quality growth. And as you see here at CES, the Chinese are developing. If anybody in America or indeed the West believes that China are followers on technology, think again, they're leaders. You look here at Haier, you look at Hisense, both of whom have bought major parts of Western-based electronic manufacturers.
Right.
They're going to become significant competitors in the future too. So I think for the two biggest economies in the world, one at 20 trillion, one at 10 trillion, so it's 30 out of about 72 trillion for the world, the omens are all pretty good. Look at Western Europe on the up. The UK obviously faces Brexit.
Yep.
Latin America, where I was over Christmas and the year, pretty positive. Asia, parts of Asia facing some difficulties, but other parts such as India, the Philippines, Vietnam, really showing some strength. South Africa, some positive political developments recently.
Yeah.
So all in all, I think looking pretty positive, with the caveat that clients are still very focused, I think wrongly, on cost. And we're going to see a battle play out amongst the big tech giants. We have the big five, the seven sisters, as I call them. You throw in the two Chinese companies, Alibaba and Tencent.
Yeah.
You've got seven companies with all with over $500 billion market cap. Those are the big seven that are going to be fighting out on artificial intelligence and voice-activated devices.
Well, among those big seven, I imagine, are the duopoly in the advertising world, right? Google and Facebook, which are most disruptive and dominant in the advertising world. What do you expect this year in this duopoly, Martin? How that's going to affect WPP, particularly as Facebook is trying to attack this issue of fake news?
Yeah. Well, I think, first of all, you've got to get it in some perspective. Our media book is about 75 billion total billings, of which 50 billion is our media book. If you look at that, in 2017 and indeed in 2018, Google and Facebook will be extremely prominent. They'll be number 1 and 3, or even 1 and 2. If Disney, Fox goes through, they will be a strong number 2. Whereas last year, Facebook and Fox were pretty much the same. So what's happened with the duopoly, as you put it, and probably quite rightly, what you see in that duopoly is the growth of a partnership with the agencies, ourselves included, which has been so strong. So frenemies have become much more flexible in their approach. I think the big thing in 2018 is going to be what happens with Amazon. Amazon threatens Google on search, and threatens Google on their advertising platform. It's very small at Amazon at the moment, probably around 2 billion, 2.5 billion, versus 100 billion advertising at Google and 40 billion at Facebook. So in its infancy, in the foothills, a pimple in a way on the elephant's backside. But having said that, Amazon is coming fast and coming quickly. In addition to that, there's Snap, again in the foothills, and Oath, which is in the process of formulation and development. So there are some threats to Google and Facebook, but they are still dominant. I think the big one is Amazon, and I think what you will see is regulation starting to rear its head, not just in Europe, but in the US as well, as that big seven, the seven sisters, the 5 big tech companies, US-based, and the 2 in China, Tencent and Alibaba, become more and more important.
Martin, I've got to squeeze this last question in, and you are probably expecting this. Look, there's a lot of disruption going on in the advertising world, but for you, the disruption is coming from the consultancy world. Deloitte, Accenture moving into your space. I saw that news yesterday about WPP consolidating Cantor Consulting. Those lines are now being blurred between consulting and creative. Where do you see WPP in the next few years? Do you see yourself being bought by one of these consultancies, or you buying one of them?
Well, I think most of the consulting companies are partnerships, so they drain their P&Ls and their balance sheets every year. So there's very little there to buy if you wanted to buy one. There are a couple of quoted ones like Accenture and Capgemini, but I think where they get into our space is not through digital or creative, as you posited. Where they get in is at the cost side. They go to CEOs and say that they're spending too much, particularly in this non-inflationary, cost-driven environment, and they say, we'll reduce costs and you pay us a percentage of the cost that we reduce. I think that's very short-term thinking in the long run. Going back to the Amazon point, Amazon controls data. They know what consumers are doing. They pose a big threat to our clients in terms of the long term and control of that data and the consumer experience. That's where we can help by consolidating our effort in media, in data, and intelligence in a more effective and integrated way. Where we compete with the consultants, you'll see a couple of things that later this week announced where we outcompete the consultants and outdo the consultants. In our direct space, they're not invasive. It's in that cost-driven space is where they make traction. And I think in the long run, that's going to inure to our benefit, not to our disadvantage.